Welcome to the Wealthworthy Podcast. I'm Trisha.
Hi, I'm Darian.
Thank you for joining us. This week we wanted to talk about the stock market. So the stocks are going up. Now what should you do? Really, it's been a long couple of months. Just with everything that's been going on. And then on top of that, the stock market as a whole has been doing incredible despite everything that's been going on in the world. And so if you've had money invested, you're thinking, like, oh, I've done some decent returns on certain things. Or if you were holding for a longer period, right, like it may not have been as favorable as you'd like it if you were holding, say, before COVID. So in these last couple months, I think we've recognized that there's certain kinds of stocks that have benefited most from this situation and just from the prospects that people are seeing in the future for certain companies, right? So companies like Zoom, companies like Amazon, Walmart, like all of the retailers where you can buy online. And then on top of that, anyone or any type of company that's providing additional support that companies need. So security, cloud storage, like all of the different aspects that could possibly benefit. And so I think now people have seen huge returns, and if you're in the market, you're wondering if you should buy, sell, hold. If you're not in the market, you have the same questions, right? But the key to it all is being able to buy on a pullback. So you don't want to buy while things are at its all-time high, but at the same time, knowing that some of these stocks are going to continue growing in the long run, it could be a minimal question, right? Like you might not have that same thought process down the line. Like you might just like, well, in a couple of years, this is up 30% from here. So I could have been in. But the reality is that in the short run, you want to be sure that you're buying at a good price. And then some of these stocks have been going insane. So you see like electric vehicles, Tesla and NIO have been skyrocketing, and people question all the time whether these valuations are real or if they'll grow into the valuation or if we'll see a huge drop. And so you don't want to be on the receiving end of anything that could possibly have a huge drop. But at the same time, you do need to recognize that collectively, we as a society have kind of decided that this is the move that we're going to take, that we're all enthusiastic about what's going on in the market. And for areas where we're not as enthused, people are shifting their money back and forth. Like, do I start looking at some of these retail stocks that are brick and mortar, if we are able to get back out and begin shopping and activities, entertainment, right? All of those things that we put on pause, like people are like, well, are those things going to come back with a vengeance? And then things like gold, it's kind of like, oh, is this going to completely flatline because Bitcoin is taken over? Or are they both going to rise? So all of these questions are kind of looming, and at this point we've come up with our own conclusions. But is there anything else at this stage that you would say you've learned, Darian, over the last couple of months?
I would just have to say that the market can change at any time, and you just have to be prepared for that. So I think it just goes back to just analyzing the market, analyzing the stocks that you want to invest in, and kind of having your funds allotted for each one, and just being able to learn how to play the long game. And then if you do want to pull your money out or trade the stock or sell the stock or invest in something else, you still have that option.
Yeah, that's a good point of just being sure that you're using funds that you're comfortable with leaving in for a long period of time. Because in the short run, things can fluctuate in the direction you want it to or completely opposite. For example, like with some of the Chinese stocks, like Alibaba, JD.com, like Pinduoduo, they've all been impacted by political influences, right? So China has been going through a whole debacle on whether they are okay with some of these companies proceeding as is and continue growing into big empires, because they don't want to create monopolies in different industries. And so that has caused the stocks to drop a good, depending on where you're counting from, 15-20%. And so you have to be mindful of the fact that that can happen at any time. That's a pullback that you could potentially see just in general market weakness. But imagine if you get that coupled with something else, kind of like with Fastly, where that thing drops probably 40-50%. And they really were struggling because one of their main customers is TikTok, and once they reported out that they didn't get as strong a sale as they anticipated from TikTok, then it was like all hell broke loose. People were just like, oh, let me get out of this now. Their future's uncertain. And while it may have been an overreaction, it still led to a huge pullback. So if you bought at the highest point, then you're just waiting for your money to at least break even. Whereas buying at that point, if you were the one coming in buying at the lowest point that Fastly went to, and then you're now watching it go back up, then you're in good shape, at least in the short term. And if you think that the company has strong prospects for the future, then you're expecting to see huge returns down the line. So a good way to play it is definitely to think about where you think the company will be in the next 2 to 3 years, right? Sometimes you're okay with even waiting 5 years, but the reality is that you don't want to be sitting waiting for stocks to go up if you don't think they have a strong future. And that has to be one of the big lessons that I've seen or learned over the last couple months too. Just when you are holding long on any stocks, you don't want to have so many that you're like, oh, I don't really care about this company. I was in it for short-term gain, and then when there's a huge pullback, you're still stuck in it, right? So just be cautious of which companies you want to continue investing in that you think long-term you'll be comfortable with. And if there's a pullback, you're comfortable also putting in more money into that stock if you think that it has long-term potential. So that's one of the biggest things that I would say, just making sure that all of the stocks that you have, you know why you're in them, you can see the long-term vision, and you are good with it pulling back 20% at any given point, right? As long as you know that there's nothing that fundamentally changed about the company. So definitely one of the things that I would say you should continue being wary of. On top of that, there has been a huge shift of people now more interested in buying Bitcoin. So if you haven't made any purchases in Bitcoin, it might be the time to look closer at crypto as a whole and determine whether or not you want to start a position there. There have been a huge number of broad claims on where different analysts think that the target price is going to end up. And if you're as optimistic as any of them about that, you want to make sure that you're in Bitcoin as well. I've seen it where analysts think it'll go to 1 million, and more analysts think that it'll go to 500,000. But the reality is just that we are in a space where it's going to continue growing as there becomes more and more optimism about it being a serious form of, I want to call it currency, but for tax purposes, I guess it's property. But whatever the case, you want to be sure that you're involved and understands where the money is moving to, especially if you're looking to get any gains. And the same rules apply, right? Regardless of where you purchase your Bitcoin from, you want to make sure that you're getting decent rates You want to make sure that you're also buying it on a pullback, because buying at the highest again might not matter in a couple of years, but if you get in on a pullback, then you are able to see gains faster than you would if you buy at a higher price, right? And you get more gains because now you're able to take advantage of that spread, where you could have just been sitting in the red while you wait for the market to recover from any pullback. So that's the biggest thing for Bitcoin, just being sure that you get a good price, that you're comfortable with what you leave in there. And the consensus seems to be that we'll be at the $20,000 to $21,000 mark within this year, and as we can see, it's hitting all-time highs every other day at this point. So it's only, say, 200 points now away from hitting that 20,000 mark. But, just this past week, we saw it pull back to 17,000. So you want to be wary of the fact that there can be a pullback. Market reacts to the information it has at the time. So if new information comes out that adversely impacts Bitcoin, then you need to be ready to pull the trigger and add to your position if that is what you're interested in. Any other takeaways that you have, Darian, from your investing?
I would have to say just always be prepared for whatever, because things can change instantly, and just have an open mind and just do your research, because there's a lot of different stocks out here that you can invest in. Like I always say, no matter what you invest in, you're always taking a chance. So, do your research, find some things that kind of excite you and you want to know more about, and take the chance and putting your money in the pot.
Yeah, even with the market being as high as it is, you can find different stocks that you are interested in putting your money into, right? Like you can look for different opportunities that may still be fairly priced, that people aren't necessarily thinking about. Like your goal is to get in before analysts on Wall Street decide that it's the thing to be in. And a lot of times they're going to begin giving their consensus on whether you should overweight, add to your position. They're going to do all of that once they see progress, once they see huge returns or, huge indicators that tell them that they should begin adding to that position. But if you start tracking that a little bit before they do, then you can reap the rewards of it being a good company that'll give you good returns, right? So one that I would say right now people are interested in learning more about is Jumia. Hopefully I'm saying that right, but it's considered the Amazon of Africa at this point. And so Africa is a tough market to crack, and if they are able to navigate the space and make returns on their investment there, then it could absolutely be something to look forward to. They've already tried a number of different methods, and some have worked, some haven't, but and of course, like, they're in the earlier stages, so they're not hugely profitable at this point. But the goal is to see whether or not some of these companies can turn things around, minimize their losses, continue to show huge growth year over year, huge revenue growth, sales growth, right? Lowering your expenses. So just looking for all of those different aspects in these various companies could help you determine whether or not you should start looking closer at some of these companies. But at this point, I think everyone is looking for, like, what's going to be the next whatever. And you just have to be open to having some speculation in the market, but also being in companies where you can see, like, huge potential. So one that I've been looking into more, but I've been skeptical about was Roku. And, it continues to peak and people are continually investing in that area because that's now the form of entertainment. But the question becomes, what's going to be the form of entertainment when things are back to normal? So you have to just consider all the aspects and whether you want to be in something short term because it could be a good trade for you, or if you should get in and stay in for the long term. So just wavering that, because there are things that you can trade and do well at, right? Like if you were interested in getting in on some of the cruise lines or airlines or different food options, like all of those are considered recovery stocks, and in the short run you could make a good return off of some of those. I would skew towards the companies that might be benefiting most from larger profit margins, because like if they charge more, kind of when you think about Apple, like they charge more for products and it costs them a minimal amount to make, so they're able to quickly benefit. And when you think about companies like that in the recovery space, so like Nordstrom might be one where they are able to benefit from those huger margins. And so it's less of a hit for them than somebody who is operating on tight margins. So like Gap has been struggling a lot. Just Macy's still trying, right? Like you have a number of companies that you have to really evaluate, like how well it's ran and how good their margins look. So all in all, the takeaway there is just be mindful of the type of company that you're investing in. Is it well run? Do they have money? Do they have cash? Just looking for those different indicators that'll help you know whether your investment is a reliable one or if you need to be concerned about the money that you put into the company. But we'll leave it there for today. Thank you all for joining us, and we'll talk to you again later on Wealth Worthy. Bye.
Bye.